Hey everybody, good afternoon. This is Doc Severson with 12 Minute Trading. I'm joined here with Dave Lukas of 12 Minute Trading. Today's Monday, the 29th of January in 2024. So we're just counting down the final couple of days to the end of the first month, as well as the last couple of days before the next Fed meeting decision. We all know it's not going to be any kind of rate hike or rate cut for that matter. However, the language and the tone of the verbiage in the statement is always the biggest risk that we're going to see. Yeah. As well as, guess what? This is peak earnings for the entire quarter. So I think something like a third of the S&P reports this week, and it's the big dogs as well too, like the Microsofts and the Apples and the Amazons and AMD is going this week as well too. So it is a huge week.
Don't forget we got non-farm payrolls on Friday too.
Oh, absolutely. So
we'll just keep stacking them up.
Yeah. So everything. So Dave and I were just talking about the fund that we trade, and we're going risk off in many things. Like we're booking profits like crazy right now, and just sort of like quietly fading into the back of the room, right? So wait for all the chaos to happen, which is why the thumbnail for today's video is talking about the chaos that we're expecting. And, you know, quite honestly, I mean, we can come up with every reason out there why markets should drop from here, technically. And we're thinking that they probably won't, at least for a couple of days. So, Dave, what are you seeing in the markets these days?
Well, a couple of things. Number one, I think, we talked about it in our year in review event that we did last week, and the video's on the channel, guys. You can go watch it. But one of the lessons that I said, one of the things that people need to understand is markets will run as far as they can in one direction and then turn and run as far as they can in the other. And most people hear that, they like laugh, they think it's funny. Like what does that really mean? Well, you're witnessing it, right? When you get a trend that starts like in November and goes as long as this has and seemingly to go straight up and never ending, it's like, oh, the markets are never ever going to go back down again. And then what happens is they reach that point where they turn around and they run the other way. And then it's like, oh, they're never going to go up again. And that's just how, markets, behave. But they don't happen, and those moves, those turns, those things, they don't happen when everybody typically expects it, or they need a catalyst or something to do that. So like, for example, we were talking before this, and actually you made mention like going flat, like, we booked our campaign trade on the SPX in 3 days. We booked 22%, and I think that's another important thing is that around these events like the Fed, the implied volatility goes up, even though the VIX isn't going up or anything. Implied volatility is going up, and so there's some great opportunities around these events to make money, but you don't want to really be holding into the events or need to let them kind of clear afterwards. So here we go. We're going into this Fed. We've got big earnings from like Microsoft and Google and stuff tomorrow on Tuesday. Thursday's Apple, I think Amazon and stuff too. And then you got non-farm payrolls on Friday. So that's the way we kind of looked at it, is like, okay, we took advantage of the implied volatility, booked a really nice profit over the last few days. Now we can go flat, and then we'll get back to trading when it's over. And that's kind of the thing, is like coming out of this event, like I wouldn't be surprised. We were just talking about this. I wouldn't be surprised to see markets go up through Friday. They even if the Fed comes out more hawkish, which I think they will, the Board of Governors is the more hawkish members for this year. And I'm talking about hawkish in today's terms, not like 2001 terms. I think the Fed's going to come up more. They're going to try to correct that mistake that they made in December where, markets still think they're going to do 6 rate cuts this year, right? I think they're going to temper that back to, look, maybe a few. We don't know when we'll start. It's going to be later in the year. Like, I think we're going to hear something along those lines. And then the earnings are priced to perfection. If anything is off, like look at what happened to Tesla last week. Look what happened to Visa. Visa crushed earnings. Guidance was lower. The stock's down 6%. Intel, stock's down 6-7%. Even though it crushed earnings, everything's so priced. You have to have perfect earnings. You have to have perfect guidance, or you're getting killed. And the only one that I've seen really do it so far is Netflix. And so we'll see what happens with the rest of these guys. But it's just going to be a chop fest over the next few days until we get through all this. And then we'll see where the real trend goes probably next week. And that's when, if we're going to start getting selling, I think we could see that. So not to be long-winded, but those are some thoughts right now.
Yeah, I'm going to bring up the charts here just to give people a sort of a sense of what we're talking about or with this. So we've got, well, let's see. Let's go to the S&P 500 first. So what we've been talking about is we have this massive move here, which really started, it goes all the way back to October of 2022, right? So we've been in basically a bull market started about a year ago at this time, with that higher low at the beginning of the year, and then another higher low, and then another higher low. So we've been putting in higher lows and higher highs on the weekly chart since that point for about a year. So we're in a new cyclical, it's called a cyclical bull market. And actually it's in the middle of a secular bull market as well too. In a secular bull market, we'll see little cyclical bears just like what we did in 2022. But eventually the major trend takes over and takes things up again with that positive drift. So there we go. There's our market, but what we're looking at here is just massive exhaustion across the board. The linearity is just, I mean, we're now about 200 points off of the lows just from a couple of weeks ago in the span of 800 points that we put on. So this is just massive, and it's accelerating. You can see that. You can see how things after the great financial crisis got started, and each one of these has been more vertical. And of course, there's a reason why, and it's because of the money printing, and it's because of the debasement of the currency. We all know that, right? So in an inflationary environment, this thing is going to go higher until it can't anymore. And so it's kind of a game of musical chairs. Like you want to make sure you have a seat when the music starts or stops spinning. But here's the thing that Dave and I are talking about is technically the market's got every reason in the world to rest here for maybe the month of February. But guys, it's not going to announce it very politely. It's going to come along. In fact, this is what we're thinking is going to happen. Is what should happen is we should get a retest of 4,700, maybe even 4,600. That would make total sense in the grand scheme of things as a retest of 4,600. It's not going to be that clean. What we might see instead is we may see this thing pop up to 5,000 first over the course of the next week and just completely obliterate the rest of the bears that are out there, and then do what's called a throwover. It's almost like having a clothesline up there, putting a little throwover on there. Now, we had thought last week at this point that we'd get a throwover. It wasn't having it. It just kept on going. So we may get one of those little pop and drops, a throwover at some point here in the next week or two. That would not surprise us. So be very cautious. If you have something long, make sure that you've got your hedges in place. Make sure you know exactly where you're going to sell it, because we may have kind of a difficult month here coming up. I mean, we may go through another one of these, little wonders, just like what we did in the fall of last year.
And don't be surprised though, and this seems crazy, but it's such a round number, and it can kind of pull you there, is S&P to hit 5,000 by Friday and then sell off from there. Don't be surprised. On Fed days, we've seen moves 50 to 100 points pretty easy, and then give it all back the next day and stuff. So if S&P, again, just with a week like this, I wouldn't be surprised to see S&P 500 tag 5,000, even intraday, and then just all kinds of melee start to happen from there with, sell triggers happening across algorithms and everything else and stuff. That's another possibility this week.
I mean, we've seen this type of move before. We've seen these types of moves where it consolidates sideways, and then it just, in the space of 3 days, you put on 100 points, and it's entirely possible for that to occur. So yeah, so don't be surprised.
We just don't. If you noticed that last time though, we had the energy for it. Now we're into exhaustion, so it's easier to go the other way. But like that's what I'm saying. You could maybe see this crazy move intraday that gets you up there, and then it gets sold all the way off to negative into the end of the day type thing. You can see that happen
Right.
in this environment.
So that's called a shooting star. So look for a candle that
Yeah.
looks something like this with a great big long wick to the upside. And that would normally occur early on in the day. And then the rest
Yeah.
of it, we'd probably peak out somewhere around noon Eastern time and then spend the rest of the day heading down and actually probably with a real body here being red. So we start out the day
Yeah.
here, pump it up, and then we could, I mean, this entire thing could be 75 or 100 points with the entire candle. We've seen these types of moves before.
Yep.
And in fact, if you go back and look at some of these, you'll see exactly these types of candles around every market top when we were in corrective. So it's not that we're bearish. It's, very much the opposite of that. It's just there's a limit to how far these things can go. Now, Dave, you brought up the NDX as well, too, and you made a good point about this. It's like, the monthly chart is out of gas. Now, this is not a good timing signal. You can't really time off the monthly chart. So it's just within the span of weeks, you should expect to see something happen there. But look at this across the board. Every single time frame is out of gas. And what I brought up this weekend in the market minute was, are we going to be able to support a rally if we don't have all hands on deck? And so the Russell's really interesting right now because it's got a very small Darvis box to work off of here. If we see this break above 2,000, that's going to be extremely important because then that means that the Russell's joining the fray, at least temporarily. However, what we could also see, and this is every single one of these is like this, all the way back here. Every single one of these is a lower high, lower low, and that sets the bull trap right there. You get too many people running long, thinking that the price is going to, and then the bears just come along and just destroy it. So that's been the problem with this market, is that we don't really have all hands on deck. We have 7 out of 8 cylinders firing, and so it's kind of working okay, but it just feels rough. So with that said, if there's anybody that's out there joining us live here today with any kind of questions or anything that you want to bring up, now would be a great time, as that's kind of where those are some of the things
we should add too. I think you're looking at things on the 9-day period, right?
Yeah, I kind of twisted myself into knots talking about this last week, but because the problem is normally on a quiet and trending market, which is heading higher, like we are in the NASDAQ, the Dow, and the S&P, you normally want to go to a 14 period because it does a great job of handling the speed of these things. But even though we definitely switched into that style of character, it just does not make any sense. Right now, what we're seeing is moves that are just way too fast.
Yeah, it's trending. It's not so quiet. And that's why, like, I do think quiet and trending comes after a correction. I think in this, correction to a higher low gives us that quiet and trending period, probably till through the summer, just grinding higher. You'll get some of that chop in the fall. The election happens, then we get certainty, and then you get the next round to finish it. But I have to
say the price action itself is quiet and trending, because the key barometer for quiet and trending is that you're getting range expansion, range contraction. Mm-hmm. So you're getting stair-stepping price action, range expansion, range contraction like this. Now, what we were seeing all the way through, let's see if I can bring this back.
2021 was on a slower pace.
Yeah, let me bring this back a couple of years here. Actually, the easiest thing is just to go over to I got too many things selected here. Let's just go to the daily chart. And I've got several years here. So the thing that you'll notice here is when you're in corrective, notice how this is different, because range expansion, range contraction, stair-stepping, stair-stepping, stair-stepping. Same thing. What happens here? It starts out like that and then sets up a lower high and then here's the trap. Each one of these, it sets up the trap as though it's going to go like that, and then lower high, and it brings down. So this is volatile and trending to the downside. It's much more difficult tape to trade. It's it's somewhat evil in the way that it gets everybody leaning in a certain direction. You know, the analogy I always use for these things is it gets everybody leaning like over the side of a boat because you have a certain type of wind. So everybody's trying to counterbalance the wind by leaning against the boat, and all of a sudden the wind shifts. The boom swings over and knocks everybody overboard. That's exactly what happens. But notice how this is so much different. Notice how this is so much different over here. Just the character of how the price action is versus this is definitely quiet and trending. The only thing that's really, got us puzzled is how fast this thing is moving. It's not consolidating for very long before it's on its high horse and moving again. And this is why we have to kind of dial in the speed of it.
And the difference is if you look at like 2021, you can even look like on a weekly chart, but if you look at 2021, same type of pattern, it just happened over a longer period of time. And that's the thing. That's the difference here.
Well,
see?
And also just look at the slope. Look at the slope.
Not even close to the same.
Look at the rise over run. If you just look at the slope of this versus straight up. So we haven't seen price action like this except for at a bottom. This is like price action we're getting at a bottom, and it's happening after, like boom, like this stuff. Mm-hmm. Normally, once we get off of a bottom, then things start to become much more slow and much more regular. And this is where the 14 period comes along. See, this is all 14 period stuff. It works perfectly for that. But coming off of a bottom, like for this correction, that's normally what we see. So here's even the Ebola. This was our Ebola virus back then. But all of these.
Well, you had actually made a point earlier too when we were chatting about how this seems a little similar to 2018. I think you said into February, because February is typically the worst. I think the worst month for the NASDAQ, right? So was it 2018, or I think you said it was? I think that's the year. It
was the beginning of 2018. Yeah, because this was just going berserk. So we were getting a nice rally in 2017. And then we got to this point. I mean, we were having the same discussion, like, this can't go any further. It's out of gas. There's no way. In fact, let's put the fractals on here and let's see exactly how these compare. So let's look at this from, here's, no. Okay, so I need to go back a couple more years. Let's go to 10 years. And then you can see this move here. So on a 9 period, yeah, we were getting similar. I mean, this is down on a 9 period. We're getting like 16 and stuff. I mean, that's pretty insane. And then I forget what the catalyst was to drop things, but that was a very, very quick 10%. We just got a 3-month 10%, but I think what we're looking at would be a very quick 10% if we were going to get the same thing as 2018. But let's compare the notes here. 16, we had an energy of 16 on the weekly chart back then. And so where are we now? Well, we got almost to that same point, right? We got almost to the same point. We got to 13 to 14. So this is very equivalent. And, but this could actually drop back down here again, because that one, the one candle
14-day period's at like 20.
Yeah.
So
crazy
the
stuff
difference
here
in the period.
Oh, we got a comment here from Chalupa Man. So ripping to 5K by the end of the week would be eerily similar to the last gasp, August, early September in 2020. So let's go look at that for a second here.
It's similar to the last gasp of a lot of moves over the years, type thing. But it's just possible. It's just, you have such a kind of magnet to that round number. And we're sitting, I don't know, what are we at right now? We're 49.03 as we stand, but it's just it wouldn't surprise me.
Now, remember, we haven't talked about this yet this week, but last week we did throw out the idea that we've got a breaking cup with handle here with a 1,300 point. I think that was the math here.
Yeah, you said it was like 60. I think 6,200 was our target.
6,100. If we add 4,800 to 1,300, we're going to get 6,100. So 6,100 is our upper target for this one. But does it get there all at once? No, of course not. I mean, we're gonna.
Are you sure with the way this market's going, it's going to be there in the next 2 weeks?
We're gonna have shake and bakes. We're gonna have. I mean, look at us. I mean, all of us at the end of October were like, oh crap, do we have to go through this all over again? Do we have to go through another bear market? And because this was staring over the edge of the abyss. We lost the 200-day moving average. We were down more than 10%. We had lost the pivot support. There was all kinds of reasons for us to be very bearish. And that's why, right, technically, this market has been technically very difficult to read because the price levels that should hold are not holding. The energy levels that should prevent further price movement are being ignored. So this is a market very much on its own accord. It's doing whatever it wants. So Brewhead, wouldn't selling March calls over 505 SPY be higher probability than near month? I'll let you take up that one, Dave. Let's go to the.
If I was going to sell, I went to, for my double doubles, I went to the last couple of weeks selling the rut just because it's stuck in that channel. And I much prefer, it may break out, but I'm, 200 plus points out on either side, 3 to 4 weeks out, right? And already now a week and so on, right? So it's much just easier to trade a chart like that than these ones that are ripping like this. Because if you put on 4 weeks out to like March, you can do pretty well. Your challenge is going to be is if you get a big move in the beginning of the cycle. So if you're going to do that, I would wait for everything this week to unfold and let it show you a direction. Then, if it's going down, you can sell calls anyways and follow it down, right? But if you get a huge move up and you put those calls on at the beginning of the week, all of a sudden you're going to be, severely underwater and have to stay in them longer. And the implied volatility will drop more and everything too. So you're kind of stuck in those things for a while. So, I would just think about how you want to place that trade. I would prefer an iron condor a little bit more. I still think that though, that even if this week is an up week and everything else, I think as we get into February, we start to get, that selling. So if you're playing that, you may want to put a little defense in front of it, so if you're selling on the SPX, maybe buy some really cheap, XSP calls in front of it with a little bit of your credit, just in case, but yeah, you could probably sell 5,200 plus at like a, not probably closer to a 10 delta right now, if you wanted to get in there.
So Brewhead, kind of what we're talking about here is that it makes absolute sense. So from a logical perspective, it makes absolute sense to sell call spreads in today's market. But what we've seen time after time again is that just because it makes sense doesn't mean that there's other guys that are already with short calls, right? So they've already got short calls and maybe they're sitting there at 500. And what happens if the price goes towards them? What are you going to do? If you've got a short call spread, so look at this from an analyzer perspective. If I've got short calls like this, a bear call spread, my deltas are going to be negative. So what do you do to make a delta neutral position out of that? What do you do to reduce the number of negative deltas on there? So delta, what it means is that the further up the price goes, the more it's telling you, that you're going to be taking some pain on this trade. So basically, the answer here is that to hedge off a position like that, people will either buy SPY shares because that adds
Or
long
calls.
deltas, or calls, or they will add futures contracts to the S&P, all of which are long delta. So what is the net effect of that? That's more demand. And what does that do? That pushes the price up.
Short squeeze.
Right.
Well, not
So
short, but a squeeze higher.
this is where everybody gets together and becomes their own worst enemy because they're hedging their
Yep.
own bearish position. And this is why we tend to see in a market that's already going higher, we tend to see one last final pop to absolutely clear out everybody. And it almost feels like we can both speak to this, and probably as well yourself, right? So it almost feels like the market has eyes for your position. It knows where you are, and it's going to come get you. Like I've felt that so many times in the past. And then as soon as it takes you out, burst, it goes straight back down again. Because why? Because you don't need your hedge anymore. So you sell off your hedge when you get rid of your call spreads. And so all of a sudden the demand drops. So there is a reason why we're seeing stuff like this. And so this is why we're looking at maybe over the next week, we're going to poke higher, a little bit higher, to the point where everybody says this will never go down again in our lifetimes, right? This will never, ever go down. And then it will, like a day after that.
Yeah, then we need the catalyst, right? So the catalyst can be anything at that point. And in hindsight, it's always like, oh, that was it. That was the catalyst. But
Right.
it's always something. Maybe it's, I don't know, another thing, like we had, 30 soldiers injured and 3 dead over the weekend. Who knows? Maybe there's another conflict with something bigger in the Middle East that ends up being the excuse, or, an earnings, report like NVIDIA comes out later, right, than all these other guys. And, NVIDIA is not as good as what people expected, or their guidance isn't what people, anything becomes the excuse at that point. And then that's when it happens. It just is, it comes when you're not expecting it to. Yeah, that's the thing you have to understand. That's when you got to be ready to act. That's when you got to be ready to take advantage. And the pattern, as Doc showed, has been this like up, kind of sideways, up, kind of sideways, basing, up. That needs to be violated. Until that pattern is violated, it's still the same thing. So you have to wait till you see that, then you'll know, right? Because that's a change in polarity, at least in the short term. If we stop doing that kind of stair-step basing type pattern.
So we got a comment here, but the Russell trying to make a jailbreak while we're talking here. I'm just going to look quietly.
He was there the other day. It was close to 2,000 the other day.
So this is a tick chart. We've gone from about 1973 up to 1984. So it's about 20-point move on the Russell. And the Russell futures is showing about a net 15.7. So that's pretty good. So it's almost up 1% today.
Been watching this thing, obviously a lot with trading it and stuff. And you'll get these days, and the next day it'll give it all back.
Yeah, the Russell is just maddeningly difficult to trade these days. Kind of like
it'll give it all back. And then, 2000's been a pretty good sell level I've been seeing. It did break earlier in the month. It was up at like 20, or end of last year, early in the month, it was like a 2060-ish, up in that range. It got up there, and then it sold all the way back off. It is in that kind of crazy weekly channel that it's been in for a while, and it butts up against it, but it just hasn't been able to really truly break it. See that channel that's there, that has just been, it's just been sitting in that thing. And I think it'll just continue to do that. I would not be surprised to see it sell off tomorrow. I wouldn't be surprised to see it sell off into the end of the day. That's possible too. Although I think we're front running a little bit this week. I think today a lot of people are getting in, making some money, probably pull out tomorrow into the Fed, into those earnings, and go flat, and then trade off of what happens from there.
Yeah, so just watch that 40-point Darvis box. We're not out of it yet. And watch for the close. If it's going to go above or below there, watch for the close, because the close means that somebody is committed to the outcome of that. All right.
Yep.
Well, everybody, we have run out of time for today. Want to thank you guys for joining us as we kind of march our way through the markets. And, it's going to be a big week. So we're going to have some big movement from this, a lot of chaos by the end of the week. So we're putting ourselves in a position where we can just sit in the back of the room and watch all the fray happen. And then we'll go jump on the winner. So
thanks, it'll be a fairly relaxing week for us, I think.
Yeah, actually, nice. This is great. So thanks, everybody, for joining us. And for those of you that are watching this on a replay, welcome aboard as well, too. Oh, I got one last thing. Or Dave, if you want to bring this up, there's like 1 day left for...
Oh, yeah. So we did have a number of students that we had ended our whole set of benefits we did from the year in review, last Thursday, ended lesson on Sunday, but there were people that like, I was away for the weekend. I didn't see it. I really want to get it. So 12minutetrading.com/2024, those benefits, those discounts, the free master class that you can get with the coupon code is still available through today if you want to grab it. So go ahead and again, check that out. 12minutetrading.com/2024.
Okay. Hey, thanks everybody. And we will see you in the next one. Take care. Enjoy the week.
Thanks, guys.